So when I want to get a read on what's going on in the ETF marketplace, real time, my first go-to place is an ETF nerd, self-proclaimed, Dan Weiskopf is with us.
Thank you very much. We're proud.
Portfolio manager with Toroso Investments. So Dan, welcome to the program. Great to have you with us.
Thank you for having me.
So, you know, you're quite fond of saying structure matters. You've been saying that for a number of years. And if you don't mind me asking, you know, which of the ETF structures is your personal favorite? Is it the grantor trust? Is the UIT? Is it maybe the ETN or LP or open-ended fund? Which of these structures do you like best? What's your personal fave?
For me, what brought me into ETFs was transparency. So everybody talks about liquidity, they talk about the low fees, but transparency is what does it for me. So the 40 Act structure is what really turned me on to ETFs. And
that, by the way, is the most traditional. That's what most of the big ETFs, that's the structure they're using.
Unquestionably, 88% of the ETFs out there are in the 40 Act funds. So it makes sense. And the only reason why I think the grantor trusts exist is for commodities, right? Now, to your point, the ETNs are a whole different kind of mix, and they don't really have the same transparency that the 40 Acts have. So, and then you have the credit risk. So this is a whole area, without getting hyper technical, that we tend to avoid.
And a lot of it too depends on the asset class, right? So depending on the structure, you're gonna choose the asset class that meshes the best with that structure.
Yeah, absolutely. And you've spoken a lot about broad allocations. What we do is broad, core satellite, but also we hone in on sectors. And as long as you know what you own, it works fine, right? And that works perfect with the 40 Act funds.
So I got to ask you then, you know, active funds, active ETFs, and I wasn't really planning to talk with you about it, but you know, semi-transparency of actively managed ETFs. I mean, what are your thoughts on that?
Yeah, I have a lot of thoughts on that. Yeah, and to begin with, what people don't appreciate is they are as transparent as Vanguard funds. Vanguard funds may be fine. I'm not critical of Vanguard.
You're talking about Vanguard index funds.
Index funds, right? But nobody ever criticizes Vanguard for being semi-transparent. I'm not sure why this has gone that direction, as you know, and the way it should have gone is, at this point, it's Presidian active share ETFs, and just brand it that way and say, same as Intel inside, Presidian active shares, you know, and we'll see how it all plays out. But at the end of the day, you're getting 90-day transparency, and you're getting, maybe when they start trading, we'll see, better transparency on how they trade versus their INAV.
Now, how does that compare to actively managed mutual funds in terms of disclosures?
There'll be clones. Yeah, there'll be clones, you know, so at least that's what Presidian is saying, right? And that's why it isn't as transparent as your normal 40 Act fund.
Yeah. If you're just joining us, we're pleased to have with us Dan Weiskopf. He's with Toroso Investments, portfolio manager. Now, as you know, there's been this massive compression of both asset fees and trading commissions within the financial services marketplace. And of course, ETF trading has now been cut to zero on major brokerage platforms like Charles Schwab and TD Ameritrade and Fidelity Investments and others. And I want to examine this really from two angles. Angle number one is what it means for financial advisors and their clients. And we'll start there. What do you think this means for financial advisors and their clients?
The financial advisor now doesn't have to explain a $5 commission. And some of the financial advisors were absorbing that commission, maybe others weren't, but now they don't have to deal with it. And I think on a lot of levels that helps. From a client perspective, you know, at the end of the day, people don't want to pay when they don't have to. And, you know, I think firms like Schwab and TD, and I think it's Ameritrade as well, have democratized, as we like to say in the ETF world, the fee structure on trading. By the way, people always talk about democratization in the ETF space. It really means lower fees, lower costs.
Yeah, exactly. And so that's angle one. Angle two means, or what it means to ETF providers looking at it from their perspective, so commission-free platforms. If I'm an ETF provider, what does that mean for me?
It means that now you're on equal playing field with maybe some of the big boys and some of the platforms that you were not offered on. And so it provides better access.
And maybe a better opportunity for some of these younger upstart firms that may have some really innovative products that didn't get any shelf space or any recognition or notice.
Yeah, you and I are in agreement on that, and meaning that 85% of the assets that are led by the sponsors are controlled by 5 firms. And that, to me, concerns me about innovation, because there won't be innovation if you can't get that shelf space.
Yeah, it stunts innovation. People are looking to securitize cryptocurrencies like Bitcoin, like Ethereum and others. We know that there's a lot of regulatory bureaucracy and barriers, and some believe that this may be the next big phase of development in the ETF marketplace. How do you see it?
Yeah, well, we are involved in blockchain, and we are believers in crypto, so we do have a bias. Okay, I think without any question, blockchain is totally real, and it's going to be changing industries. And without any question, companies that don't have a blockchain strategy and aren't embracing that change are going to be vulnerable. And crypto is a whole different element, right? I get why the SEC is trying to be careful, but on the same token, they're also allowing for other structures that are out there that aren't as open and, I would say, retail friendly as an ETF might be. Yeah. But most importantly, I think you've got firms like Fidelity and a couple other firms out there that are solving some of the custody issues, right? And the pipes and everything is coming together. It's just going to be a question of when, not if. Yeah,
it's coming, and it's just going to be a matter too of who gets that breakthrough. Which firm is the first one to...
Which firm does the SEC say, okay?
Yeah.
And I think pretty clear cut where the bets are on who it'll be, but I'm not sure I want to name names.
Okay, well that'll be our next part 2 or sequel. Yeah. One last thing before you take off, the one place ETFs have not dominated, of course, is in retirement plans, like 401ks, and I'm going to argue that the ETF industry, for all of its glory and fame and innovation, has been so engrossed in innovating new products that they've totally missed the boat on product distribution in retirement plans. And I've been harping on this for 10 years at least, probably longer. The mutual fund industry, I would say, is arguably less innovative when it comes to inventing new products versus the ETF industry. But they've got 401k distribution down like a science, and they continue to beat ETFs in that department. So how do you see it? Do you think ETFs, at some point, the industry will come together, and I guess the point here too is they probably won't notice this until the next bear market, when assets start to flee and go down, and that they don't have those sticky assets of the retirement plans like the mutual funds do.
I would say that with ETFs, you look at it, liquidity is good, low expense is good, transparency is, those 3 things don't necessarily matter for most 401k people.
What about asset class coverage? Like, for example, global real estate and commodities. I'm talking about broad, diversified core exposure. You don't have that in the traditional mutual fund format, for the most part.
No, you don't. And don't get me wrong. I have 401k plans that are ETF focused, right? They're I would say they're platform agnostic. And to your point, there are firms that are custodying 401k plans and making sure the barriers exist. But it's a problem, And at the end of the day, who wouldn't want more transparency? Who wouldn't want lower costs? 401k people deserve it, so.
Do you think it'll be something the ETF industry will solve or address? Do you think that this is a market they even want to own or participate in? Because it seems to me like they're not very interested in retirement plans at this juncture.
Yeah, well, okay, so when you speak about the ETF industry, it's $4.1 trillion. It's actually very small relative to the overall.
And it could be 10 trillion if they would just get their act together on 401ks. What's the matter with these people?
It will be 10 trillion, right? It'll be 20 trillion over time. And yes, maybe retirement programs will be a catalyst, but some of the benefits aren't there, unfortunately. So let me turn it around and reverse it a little bit. Yeah. What are the key benefits for a retirement that aren't there right now with index providers?
Well, I would say the asset class coverage, I mean, that to me is the big one, is being able to really truly build diversified portfolios for investors. I mean, I think that's a big one.
That are low cost.
That are low cost, but that also offer, that core exposure to these asset classes that have been ignored for so many years, like the commodities and the global real estate. And then also, too, I think some of these bond funds that are, what are those, target date bond funds? I think that's kind of an interesting, unique innovation for investors that really want to, have bond exposures tied to a certain year. In a retirement type of setting, I could see that being a quite valuable thing.
The interesting thing that you're talking about, though, in the case of REITs, right? Vanguard has a $37 billion ETF out there, and that
are you talking about VNQ?
Yes.
Yeah.
And that actually, I think, runs pari passu, or within the same context of class shares as the mutual fund that's out there, and one is 6 basis points and one is 8 basis points. Yeah. And at the end of the day, why can't it be on the 401k?
Yeah, exactly.
To your point.
Exactly. So we'll see. We'll definitely give us stuff to talk about looking ahead in the future. Again, thank you, Dan, for your insight and for joining us. You just heard from Dan Weiskopf at Toroso Investments. I'm Ron DeLegge with ETF Guide. Be sure to follow us on Twitter, our handle @ETF Guide, and subscribe to our YouTube channel @ETF Guide. Thanks for watching.